This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. My guest today is Kevin Zhang. Kevin is the co-founder of DFX, an Ethereum-based decentralized exchange protocol with a dynamically tuned bonding curve optimized for fiat-backed stablecoins using real-world FX price feeds. Very interesting. Hey, welcome to the show, Kevin.
Thanks for having me, Andy.
Yeah, so this is a new one for me. This is quite interesting. So, we're going to talk about DFX and stable coins and kind of your vision for almost like a stablecoin exchange. But before we do that, Kevin, I think it would be useful to have a little bit of background info on yourself. So, if you could please, introduce yourself and just give us a little bit of your background.
Absolutely. So I'm one of the four co-founders of DFX, a decentralized foreign exchange protocol optimized for stablecoins. What we do is that we try to create an ecosystem around non-US dollar based stablecoins and allow them to provide a market so that they can exchange between each other and between US dollars in such a way that we would provide a low slippage, low spread way to convert one currency to another and really disrupt the foreign exchange market in the traditional sense.
Yeah, fascinating. So essentially what you're describing is it's just like the blockchain or almost the DeFi stablecoin equivalent of what people would understand as the traditional FX currency markets, right?
Yeah, that's exactly it. And we've been building this for almost a year now. We're looking to bootstrap this whole ecosystem of non-US dollar based stablecoin. The four founders come from a traditional financial background and a blockchain crypto background. Two of our co-founders previously worked at banks, particularly in foreign exchange. And then we have another two co-founders. One of them even used to work at the Ethereum Foundation. So our CTO is amazing and really built a great protocol that allows for super efficient swaps between one currency to another.
Very, very cool. And Kevin, so you mentioned that DFX concentrates on non-US dollar stable coins. So could you just put that into context, or why is that?
Yeah, so right now, traditionally, the crypto ecosystem is centered around the US dollar. So the biggest markets are USDT, USDC, DAI, USD in the US dollar sense, and it's probably close to about $100 billion in US dollar based stable coins. We think there's going to be an enormous market for non-US dollar based stable coins, mainly because not everyone transacts with US dollar. We understand that the US dollar is a very, very important currency, and it is essentially the most important currency in the world. But when we think about money, when we think about paying for things, many of us around the world, I myself am not an American. I don't pay my taxes. I don't pay rent. I don't pay for food in US dollar. But I'm sort of forced to hold it and, have my perceived value pegged to a currency that I don't use on a day-to-day basis. So we think there's a lot of value in terms of, providing an avenue for not just crypto users, but everyday users to get into the crypto ecosystem using a currency that they're comfortable with, that they generally hold. They don't have to hold risk in the US dollar. There's obviously going to be some kind of a risk in terms of holding any other currency in the world. So if the dollar devalues, then you're left holding less value overall. So we think there's going to be an explosion of non-US dollar based stablecoins that will come into the market in the future, really.
Yeah, I think that makes a lot of sense, Kevin. Very hard to disagree with your thoughts there. And I think that just benefits the entire ecosystem, really, if you can kind of help onboard liquidity and volume to a variety of different fiat-backed stablecoins from, different currencies from around the world, then that is just or the benefits are to individual traders, institutions, and the wider ecosystem as a whole, right?
Absolutely.
I want to talk more about stablecoins and also use the New Zealand dollar stablecoin or the NZDS as an example, because I know you guys are listing that. So we'll come to that in a second. But just before we do that, let's just maybe you can kind of help explain some of the technicalities under the hood, so to speak, Kevin, because of course, if you're building a global platform, if it's, DeFi on Ethereum, you're going to need an A&M, right? And you're going to need liquidity providers. And I mentioned in the intro this bonding curve that you've optimized for stablecoins. So look, anything you just want to cover off on kind of the nuts and bolts on how it works, feel free to do so, and then we'll switch back to stablecoins.
Absolutely. So a good way to think about DFX is that it's almost like a cross between Uniswap and Curve. And if you're familiar with those two protocols, they both use a bonding curve. The bonding curve for Uniswap is a lot more rounded. The Curve bonding curve is a lot more flat. We're sort of in between, where we actually concentrate about 50% of our liquidity into a region that leverages a Chainlink oracle that pulls in FX price feeds from traditional markets like Bloomberg, like your traditional banking Forex data, and feeds that into the blockchain, where DFX pulls that information, and then we price it based on the external foreign exchange information that we get. So what that means is that you have extremely efficient trades in the middle of our bonding curve that allows people to essentially almost get close to spot rate when they're converting one currency to another. So that's really the sort of like magic that's different between DFX and all the other AMMs in the ecosystem. We're also using a sort of liquidity mining incentive program to sort of bootstrap liquidity on the DFX protocol. One of the, starting an AMM really is a chicken and egg problem. If you don't have liquidity, you can't get users. If you don't have users, you can't get liquidity. So what happens is that we have an incentivized liquidity mining program that allows us to bootstrap the initial liquidity, give it a certain amount of liquidity to just get the ball rolling. And as users start using the protocol to make some trades, volume increases, more liquidity comes into play, and then hopefully that snowballs into more and more liquidity. And that was one of the issues with non-US dollar-based stablecoins before liquidity mining began. I think people were trying to sort of build these non-US dollar stablecoins for probably like 3 or 4 years now, but with like limited to little success, mainly because they couldn't bootstrap that initial liquidity to incentivize people to sort of like use the stablecoin. But that sort of really changes things in the last like probably 8 to 10 months, when yield farming, liquidity mining came into play, allowed people to sort of have a reason to put their idle liquidity onto our AMM and really provide that liquidity for people to trade against. And there's always going to be a market for that once we sort of kickstart and bootstrap the initial volume. And really with any AMM, it's really what we call like an equilibrium in terms of users and liquidity providers and like market makers. They all have to work in unison to create sort of like a balanced ecosystem. So we're always tuning our automated market maker, the parameters in it, just so we can sort of create that like nice equilibrium. So essentially everyone wins, because when we're doing liquidity mining, we're essentially getting a crowdsourced liquidity. We want to make sure people providing liquidity are making yield and making fees off of those trades, and people that are trading on it are getting a really good rate that they can't get elsewhere. So really maintaining this equilibrium is a large part of what we do as part of an AMM provider.
Yeah, very nice, Kevin. And so, look, you're exactly right. So, if you're going to build a protocol for trading fiat-backed stablecoins, I think, as you've identified, there are a couple of different pieces of the puzzle that you need. You need an AMM, you need liquidity providers, you need the protocol itself, and of course, you need stablecoin issuers, or you need to work with stablecoin issuers around the world to get those various different foreign currency backed stablecoins onto your platform. And so, of course, one of those stablecoins that I mentioned earlier is the New Zealand dollar stablecoin, the NZDS, which is issued by Techiment here in New Zealand, of course, which is where I'm from. So that's quite cool. And, so the New Zealand dollar stablecoin, the NZDS, of course, is backed one-to-one with physical New Zealand dollars and a cash and cash equivalent treasury, which is managed by a New Zealand registered financial services provider. So that's a bit of a mouthful, but that's the kind of language that you want to see if you're going to trust a fiat-backed stablecoin, right?
Absolutely. Like, we work with stablecoin issuers around the world, and what we do is we do due diligence on our stablecoin issuers, make sure we're providing the highest quality stablecoins into our ecosystem, mainly because we use a Chainlink Oracle, so a traditional fiat-based foreign exchange provider that feeds into the ecosystem. So one thing that's really important to us is that these stablecoins maintain a one-to-one peg. And you generally have a much harder time doing that with synthetic stablecoins or crypto-backed stablecoins. So that's why we focus on fiat-backed stablecoins, mainly because you can always redeem that stablecoin one-to-one back to the fiat currency with a stablecoin issuer.
Yes, indeed. So NZDS is the next stablecoin on your protocol. Then, as I say, it's matched one-to-one with physical New Zealand dollars and a cash and cash equivalent treasury. And of course, you probably be well aware that the interesting thing about the NZD is that it's actually one of the top 10 traded currencies globally. And New Zealand being New Zealand, we're a kind of a how would you describe it? We're a trustworthy place. We're not known for our corrupt practices in government or banking or anything like that. So I guess even though we're a very small country, the New Zealand dollar it's a stable currency, and it's a trusted currency if you can trust a fiat currency, right?
Absolutely. We're really excited to have NZDS as part of the DFX ecosystem. I know a lot of our users are as excited as I am to have NZDS onboarded. Like, the New Zealand dollar, again, is a top 10 traded currency. There's a lot of confidence in that currency, and it's a great currency to hedge against US dollar risk because it's so different and I guess like isolated. It's not pegged to the US dollar, and it has a different type of economy to the US. And again, like you said, the central bank in New Zealand is known to be a trusted actor. It's a great new stablecoin for us to add to our collection of stablecoins on the protocol.
Yes, indeed. And look, if anyone wants to know more about the nuts and bolts of how the NZD stablecoin, the NZDS issued by Techiment, how that all works, I'll make sure I include a link to Techiment and the white paper in the show notes. And of course, there'll be a link to DFX as well. So Kevin, look, I'd love if you could what are the other, maybe just to put all this in context, if you could list some of the other fiat-backed stable coins that you have on DFX, and then to kind of put that into context even further, just run through some of the typical use cases that you see for, you know, institutions or traders or whoever. What are the kind of primary trades that they would be undertaking and executing, and what would be the reasons for that?
Absolutely. So currently we have three non-US dollar-based stablecoins on the DFX protocol. We have the euro, we have the Canadian dollar, and we have the Singapore dollar. So that's really spread across like three different continents. Adding the New Zealand dollar, I guess that's another one. So that's great. So a lot of people use DFX really as an on-off ramp, as a stable coins as an on-off ramp to basically get in and out of cryptocurrencies. So what I mean by this is that if you're in Europe, you can mint our euro stablecoin partnered with Thesis to create, and the EURS stablecoin is backed one-to-one with euros. And what happens once people get the euros is that they would use DFX to convert it to, let's just say, USDC. And from USDC, they would buy any other cryptocurrency available and trade it with USDC. So why would someone really do this? Mainly because you suffer significantly less slippage going from a one-to-one backed stablecoin to USDC through DFX. We essentially give you spot rate plus 5 basis points. And if you've ever gone to a bank or you've even online foreign exchange dealers, you're generally looking at least 50 basis points, if not like 100 basis points at traditional financial institutions. And those rates are on the lower end. And what we're talking about here is that we're providing almost 5 to 10 times savings in terms of foreign exchange pricing, because we're able to do large volumes and provide really efficient pricing using our AMM mechanism. And then from there, they can trade from between USDC and any other currency available on the market. And why you want to do that really is because if you're in a smaller local market and you don't have access to US dollar, you traditionally have to go to your bank to do that sort of money exchange before you get into the ecosystem. And then you're paying the banks like, you know, exorbitant fees to do that foreign exchange. But we're really shifting that foreign exchange component from off-chain to on-chain and giving the users like significant savings in terms of, you know, making trades. So if you're doing trades, especially in significant size, you should absolutely look into using a foreign stable coin, pairing it up with DFX. You're looking at probably saving anywhere from 1 to 2% in your total trade, versus going to your bank, converting to US dollars, and then making the trade. So that's one of the primary use cases for DFX. And then the secondary use case that we're really looking to develop and build upon is remittance. We use fiat-backed stablecoins not only because they provide a very strong one-to-one relationship with the fiat currencies, but they also provide a natural on-off ramp in that local ecosystem to fiat currencies. So what that means is if we have two foreign stablecoins, let's just say Canadian dollar and New Zealand dollar, we can go from fiat Canadian dollar to a Canadian dollar-based stablecoin, exchange it through DFX to a New Zealand dollar-based stablecoin like NZDS, and then convert it to New Zealand dollar, all within a matter of like probably minutes, and settle it back into New Zealand dollar fiat currency. It literally minutes. It really depends on like, you know, how long it takes for the blockchain to process it, but we're probably talking about under 5 minutes if you do it efficiently. And if you look at the alternative, you would have to go to your bank, send a wire transfer, get eaten up in foreign exchange fees, wait 3 to 5 days for the wire to settle, and then you know, if anything goes wrong, it's almost impossible to track and trace, you know, where the wire is, and all you really can do is like wait, because in the wire system, they use corresponding banking, and they can potentially hop through 2 to 3 banks before reaching your final destination. So what I'm saying here, not only do you save money, but you save a lot of time, and we provide a lot of efficiency if we're going from, if we're sending money from one place to another. I hope that sort of like answers some of your question, Danny.
Yeah, no, I think that makes a lot of sense, Kevin. On the first part, if a trader can save, even 1%, that can sometimes make or break a trade, right? So, there's any cost savings there is always a good thing. It's just a hunt for efficiencies, right? And, secondly, remittance, of course, makes a lot of sense as well. And that actually it kind of leads me to, well, let's switch gears a bit, Kevin. I want to, if we could kind of look at things from a slightly more macro perspective, just in terms of the wider discussion around, I guess, stablecoins, right? So, there's been a lot of discussion, well, globally, but particularly in the US, from, of course, the regulators, right? And, also entities such as, not so much Facebook, but I'm more referring to David Marcus, who, of course, you'll be aware is the, I suppose, the lead of what used to be called the Facebook's Libra project. It's now called DM, I think. Is that how you say it?
That's right.
Yeah. So he published, he's always publishing, blogs and so on, just kind of updating people on this kind of slow and laborious process of trying to get this thing to market. But, he does, I guess the problem that they're trying to solve, it is a noble cause. People are a little bit suspicious of Facebook's intentions, and probably rightly so. But he does frame it quite well, and that when it comes down to it, the kind of the global financial system, it simply is. It's clumsy, it's slow, it's not well connected, it's not interoperable. There's, there's just under 2 billion people around the world who I think are still unbanked and don't have access to financial services. And then Marcus, he also says that there's, 62 million Americans who are either unbanked or underbanked as well, simply because they've been kind of left behind by the current system. So, the way he would frame it is that the Facebook stablecoin is kind of designed to serve those kind of people. And yeah, I mean, just interested in your thoughts. Well, let's talk about Facebook first, and then we can talk about their regulatory environment after that. But yeah, what do you think of Facebook's intentions, and are you following that project?
Absolutely. We sort of operate in a very similar space. I think one major differentiator here is that even though Facebook is trying to use blockchain and the capabilities of blockchain, a lot of the processes that they're sort of following lead to more of a centralized approach, right, and sort of like a single winner take all, aka Facebook, in terms of the ecosystem. So you're essentially funneling everything through Facebook. The way that we're sort of approaching it is more of a decentralized approach, where we have different stablecoin issuing partners around the world, which is different from a single player take all sort of model, in a way that, in New Zealand, you have Ticketman. In Canada, you have Patriot. In Europe, you have Thesis. In Singapore, you have Expert. So these are all independent players that operate in their local region and local economy, such that they provide the values to their own residents. And sort of like you sort of get outside of that monopoly sort of like effort in terms of what Facebook is trying to do. And we still do it in a very coordinated manner, but we work with our partners and create a decentralized network, and more fitting for the blockchain ethos in a lot of ways.
Yeah, makes sense, Kevin. And I think what's fascinating about all this is that over the next 10 years, the next decade or so, and perhaps even beyond, we're going to kind of see this, how would you frame it? Almost like what it kind of is a battle of the blockchains, right? So, or the battle of the currencies. So in one corner, of course, you've got, big, bad, clumsy old Bitcoin, but, clumsy and old, but really ruthlessly decentralized and censorship resistant, and no one can really there's no really real attack vectors as such. So Bitcoin is solid as a rock. Then in another corner you've got whatever Facebook does, right? So a kind of a centrally issued blockchain like a stable coin, but it's centralized. And then in another corner, you've got the rise of central bank digital currencies, which will certainly be deployed across the next decade. And then you've got stable coins, and then you've got fiat currencies. And it's just going to be very interesting to see how this all plays out, right?
Absolutely. I think there's probably going to be multiple players. CBDC being the most interesting one. If government starts, just operate CBDCs, I have a personal thesis that these governments will be operating CBDCs in sort of like a closed loop environment that is probably not interoperable with each other in a way that it would still make sense for private stablecoin issuers, for example, all the stablecoin issuers that we're working with, to wrap these closed loop stablecoins, closed loop CBDCs, and provide a more public accessible version of it in a decentralized manner that would still connect to something like, for example, DFX to do the foreign exchange component, and then be able to on-off ramp into different currencies. Like, for example, we see China doing CBDCs, but they're doing it in a completely closed loop manner where they keep it all within their own ecosystem. They probably keep it all within their country. And there's just no way to participate in that ecosystem in a global manner. So eventually we will likely see different operators wrapping it in potentially an ERC20 standard and making it more interoperable with the rest of the crypto ecosystem. That's just a more personal philosophy and theory. But CBDCs will be less useful if they are in a closed loop ecosystem.
Yeah, completely agree, Kevin. I said we'd talk about the regulatory environment. I suppose this is more relevant in the US, but of course, everyone pays attention to what is happening in the US. And I'm sure you've seen, Gary Gensler has been, and on behalf of the SEC, he has been, I guess, putting up some signals that there'll be the SEC wants more control, more visibility over all parts of the crypto ecosystem, and that includes stablecoins. And I do have a quote here. Mr. Gensler has said that there's an existing stablecoin market worth 113 billion, including 4 large stablecoins. Some of which have been around for some years now. And these stablecoins are embedded in crypto trading and lending platforms. Okay, I'm losing my track here, but I think the point that Gensler is making is, here it is. He has warned or signaled that stablecoins might fall under securities regulations and it's a big if they are backed themselves by securities or a mix of fiat currency and securities. And sort of relevant to this is, I'm sure you've seen yesterday that the kind of the Coinbase Circle partnership behind the USDC stablecoin. They had a bit of egg on their face just briefly yesterday when they had to admit that it wasn't quite a one-to-one dollars in a bank account backing. Did you see that?
Yes, I did. And I guess what they're trying to do is sort of change the methodology of what the backing will be and really stick to cash and treasury bonds as the only 2 mechanisms of holding the collateral. I think they probably got into a little bit of like they got into a bit of trouble probably from the regulators because they were probably holding securities behind the scenes.
Yeah, that's right. And look, I mean, for one way or another, this stuff will get cleared up, and it's just, I guess, because of, it all goes back to Tether, right? And because of I'll just say the uncertainty around how Tether worked and how it was backed and even who was behind it, it just kind of created a slightly murky reputation that unfortunately has kind of tarnished the idea of stablecoins just because of that. Do you think that's accurate?
I think that's absolutely accurate. The transparency of Tether is lacking quite a bit, and because of that, it has sort of put stablecoins in a tricky position. If they were actually fully backed and everything, I think the whole ecosystem would thrive a lot more. But I think there's always doubt that Tether is fully backed and you're able to fully cash out of the Tether that's outstanding right now. So absolutely, and that's probably one of the reasons why DFX, when we were sort of deciding on which US dollar-based stablecoin to build on top of, we went with USDC versus Tether.
Yeah, makes sense, Kevin. Well, let's just finish off this part of the podcast on DFX again then, Kevin, and just before we go to the break, and we'll finish off, we'll have some fun with the very famous Crypto Conversation hot take round. But I did notice on your website that you have some good backers, right? So you got the likes of Polychain Capital, DeFi Alliance, and Castle Island Ventures, who of course, one of the guys behind Castle Island Ventures is Nick Carter, who of course is a prominent Bitcoiner. And I just popped Nick a DM on Twitter. I just said, "Hey Nick, I'm speaking to Kevin at DFX today on the podcast. Just curious as to what was so compelling about DFX that you guys wanted to get in behind." And Nick, very nicely came back to me straight away, and he just put it quite simply. He just said that there are a lot of different challenges facing today's financial markets, obviously, and he just sees an ongoing rise in the relevance of stable coins globally, likes the way that you guys assess the market opportunity. And so I thought that was quite interesting.
Yeah, so it's very interesting. So Nick and Castle Island, they were one of the earliest backers of the DFX project. So they were actually part of our pre-seed round that was done back in October of 2020. And Nick, as much as he loves Bitcoin, has a soft spot for stablecoins because he understands the relevance of the technology behind stablecoins and what it can do. Back in, I guess, like mid 2020, Nick released a paper on stablecoins that highlights a lot of what he thinks stablecoins can do, and how they can really change the financial ecosystem. The listeners here want to give that a read. I believe it is on his blog post.
It is, yeah,
or his blog page.
I'll put a link to that in the show notes as well, because Nick, he when he messaged me, he referenced that paper as well, and I did have a quick look at it, and yeah, it's excellent.
Yeah, and because of that, I think what DFX is doing resonates very well with his thesis on what stablecoins can be. So we're really, really happy that we share the same philosophy as Nick, and it's been a great partnership since day one.
Nice. Yeah. I mean, you could sum up Nick's thesis as really that, he expects a highly liquid global FX market on chain. And that really, you couldn't describe DFX better in one sentence, right?
No, absolutely. And you really can't say that blockchain will disrupt, the financial ecosystem if you cannot bring the largest financial instrument, which is foreign exchange, on chain. And we have the technology. We just need to put it together to create this ecosystem.
Very nice. All right. Well, that feels like a nice place to go to a break. Kevin, we'll be back in 30 or 40 seconds with the Crypto Conversation Hot Take Round.
Whether you're an enterprise fund manager or a retail trader, buying and selling cryptocurrencies successfully requires price discovery you can rely on. Brave New Coin's liquid indices provide trusted US dollar prices for Bitcoin, Ethereum, and Ripple. Featuring end-of-day or intraday outputs, you can count on the BLX, ELX, and XRPLX for accurate US dollar pricing for smart contract oracles, settlement price discovery, net asset valuation, and performance analysis. Visit bravenewcoin.com to find out more.
All right, we're back and I'm with Kevin Zhang. Kevin, of course, is the co-founder of DFX, the decentralized fiat-backed stablecoin exchange protocol. Hey, Kevin, I like to finish each Crypto Conversation podcast with a quick round of rapid-fire Crypto Conversation hot takes. Are you up for it?
Absolutely.
All right, just want your hot takes, quick, snappy answers here, Kevin. Just a bit of fun. Here we go. Where would you say that you sit on the Bitcoin maximalist to multi-coin opportunist spectrum?
Definitely on the multi-coin opportunist spectrum.
Yeah, makes sense. All right, well, Kevin, what would you say is your firmest conviction, crypto opinion?
I'd say that stablecoins will disrupt the whole ecosystem. We've made a big bet on stablecoins, but in particular the Ethereum ecosystem and EVM compatible chain. So we think that Ethereum will be a major player in this space as well.
Very nice. All right. Well, Kevin, Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. So look, it's a while away. It's a big question. I know. Anything you like here, but blockchain, stablecoins, DeFi, what does it all look like in 10 years' time?
In particular, stablecoins, I think it will change the way that people move money, send money from around the world. No one will even think about foreign exchange anymore because they know they're always going to get the best rates routing through DFX. For example, people will be more comfortable holding and managing their own wallets and self-custody in such a way that they don't. They will use the banks less and use a more a fintech-based application with a blockchain backend. The front end could still look like your traditional, fintech application, but a lot of it at the back end would be powered by blockchain.
Very nice. Well, also, Kevin, sci-fi author William Gibson also quite famously said that the future is already here, it's just not evenly distributed. Can you think of an example of the future being here right now, but most people just aren't really aware of it?
I think everything that we're doing right now in the blockchain crypto ecosystem, a lot of people, even though they are in crypto or in blockchain or they're holding certain cryptocurrencies, they don't dive into a lot of the DeFi stuff. It's still very nascent and only a very small subset of users even touch that stuff. But once we branch out a little, make it more user-friendly, there's still a lot of friction in terms of using a lot of the DeFi applications. Once we get through that little hurdle, get into hands of more people, make the user experience better, I think it just changes the whole ballgame in terms of what financial applications are. I think in the future, or even now, we're going to see more and more fintechs focused on blockchain versus traditional banking systems.
Absolutely right. Could not agree more. All right. Well, time to zoom out. Time to get a little bit weird just for a second, Kevin. What do you see as the long-term future for the human race? Do you see dystopia or utopia?
I'm an optimist, so I'm going to say utopia.
Yeah, nice. That's that's what I always say as well. All right, let's start to close this out, Kevin. Finally, what is your favorite science fiction book, film, show, or universe?
This is probably a very stereotypical kind of answer, but I have to go with Back to the Future.
Oh, Back to the Future, nice.
Yeah.
I think, look, Kevin, I've done, somewhere in the region of, 130, 140 podcasts, and I've asked that question that many times. I think you're the first person to go for Back to the Future, but I love it. Great, classic film series. Michael J. Fox, The DeLorean. What's not to like, right?
Absolutely.
Awesome. Well, hey, this has been fun, Kevin. I've enjoyed talking to you today, and I hope that was of some relevance and a benefit to the listeners. Nothing else to say really, except to hand the microphone back to your good self. Please tell the listeners where they can go to find you on your various social media platforms and the like, and where they should go to learn more about what you guys are building at DFX.
You can definitely find DFX at dfx.finance. That's our main landing page. We're active on Twitter as well, so at DFX Finance, and we're available on Discord. We have an active community over there. You can access our Discord channel at discord.dfx.finance. Really happy to be on the podcast. Thank you, Andy. Great questions, and I hope the listeners learned a little bit about DFX.
Awesome. All the best, Kevin. Thanks very much, and bye for now.
Have a good one. Bye.
All right, there you go. That was Kevin from DFX. And yeah, I enjoyed that. Sometimes, stable coins, can be a little bit of a dry subject. Even in the wonderful wide world of the wider crypto ecosystem, but he was good. I think that was actually turned out to be quite a fascinating discussion. I certainly enjoyed it, and hey, big shout out, props to you, Kevin, for going with Back to the Future for your favorite sci-fi film. All right, let's finish this off. Thanks, everyone. Don't forget to subscribe to the Crypto Conversation in whatever podcast app you are using. Feel free to give us a good rating in Apple iTunes or the Apple Podcast app. Always appreciated. Drop me an email, andy@bravenewcoin.com, if you got any feedback. Otherwise, see you next time. See you real soon. This was the Crypto Conversation for Brave New Coin.